Hello, investors, and welcome to our little session here today on using the Schwab Trading Journal, specifically the Verticals tab. Let's go ahead and just jump right in here and get underway here. So just keep in mind, investors, that the information here is for general informational purposes only and should not be considered an individualized recommendation or personal advice. Calculations for historical profit and loss are provided for illustrative informational purposes only. Do remember that investing involves risk, including the loss of principals. Options carry a high level of risk and are not suitable for all investors. Multi-leg options strategies will involve multiple transaction costs. Past performance is no guarantee of future results. And this trading journal is for personal use only. Well, with that, why don't we start off by taking a look at a couple of example paper money trades on the Thinkorswim platform. Here's what we have here is we have two example trades. We have a short vertical trade, and we also have a long vertical trade. The first one up here, this appears to be a long put vertical where we purchased the higher strike price at 136. We sold the lower strike price at 130. That's a $6 wide vertical spread and resulted in a debit of $1.82. Here we have a short vertical spread. On this short vertical spread, it looks like we did 6 contracts on the short vertical spread and 1 contract on the long vertical spread. On the short vertical spread, we sold the 142, we purchased the 143, and that resulted in a net credit. This was a net credit here of 26. Now, how would we enter these trades then on the Schwab Trading Journal for verticals? Well, let's go ahead and come back over here and just take a peek at an example. So here we are on the spreadsheet journal, I guess you could call it. Let's come down here to the bottom and click on the vertical section of this trading journal. And right here, let's go ahead and just start off. Why don't we start off by entering the short vertical? So over here, I've got an entry date column. Also, we have columns for symbol, width, and so on and so forth across here. We'll discuss these columns that are going on and entering in these example trades. So for entry date then, we want to go ahead and do 5/1/24. We'll use May 1st. By the way, if you have a question on how to enter the date, just click on the column heading here. When you do that, this little pop-up gives you the instructions: enter date in month, year, date format, i.e. 1/21/24 for January 21st of 24. Also notice the additional column headings. All these column headings give you some detailed instruction as far as what to put in the information below. Also, column headings provide you information of what's contained in the column. And these are columns that are automatically calculated for you. So keep in mind these column headings. You can get some additional information just by clicking on there. I could say more detailed information. Let's come back over here and put in our symbol. The symbol on that stock was TSM. The width on the short vertical was $1 wide. The credit, if I remember right, was 0.26. The number of verticals, we did 6 of those. Transaction costs, we'll just use transaction fees of 65 cents per contract. Notice that the spreadsheet automatically calculates for you the theoretical max gain here, the theoretical max loss, and the theoretical return on risk. You know, for demonstration purposes here, why don't we do a what if exit, okay? So we're gonna come over here and let's just say, let's say that we actually exited this trade on the 15th of May. Well, when I use 15th of May, I'm gonna do 5/1/5/24 for the 15th of May. Notice when I enter in a closing date, these columns populate for me. Because there are situations with regards to a credit spread where you look to possibly let both options expire worthless. In that case, there wouldn't be any credit or debit in this column right here. We do want to keep in mind that when we're talking about short options and moving up to expiration, those options can be exercised or assigned regardless of the in-the-money amount. So do be mindful of that. But over here we have these numbers. Well, let's just say hypothetically, we exited this trade at a point that provided us about, let's go with 85% of our max gain on a short vertical. That's going to be our credit here of 26. So 85% of our max gain, I'd say would be exiting out at about 3 cents, right in that area. So on the exit, on a credit spread, those exits usually involve a debit. So when we put a debit in here, we do it as a minus number. So I'm going to go minus 0.03 for my exit out of my credit spread. I'm going to hit that I'm going to hit my tab key and I automatically get an adjustment here for realized PL, including transaction cost, realized return on risk, taking into consideration transaction cost, days in the trade. Now, you'll notice we have these 4 columns and the same 4 columns over here. The reason we have the same 4 columns over here, these 4 columns are used to calculate year-to-date numbers, and those are going to be contained up here. And we also have these 4 columns here are used to calculate life to date. In other words, the life of the spreadsheet. The spreadsheet holds about 300 trades. So this spreadsheet could last you for more than a year. That's why we have year to date as well as lifetime of the spreadsheet. So right now we got 1 trade, which means we have 100% winning trades because that was a trade that was successful. In other words, had a profit, 0% losing trade. Let's try to bounce things out a little bit. We'll do that with our long vertical. So come down here on our entry date for the long vertical. I'm going to do 5/1/24. We use the same entry date, same stock, TSM, again, just for example purposes. The width on this was $6 wide. So let's go ahead and put 6 as the distance between the 2 strike prices was $6. Now again, if you had questions about width, just come over here, click on that column. It will tell you here, how you determine the width right there. And it's basically just the difference between the 2 strike prices. Over here, this resulted in a debit. And if I remember right, that debit was $1.82. So let's go $1.82. The number of verticals on this one was 1 vertical. So we got 1 vertical right there. Transaction fees, we'll use the same transaction fees of 0.65. Okay. Now we have our calculation here. Max gain 180, max loss 419, potential return on risk of 43.10%. Okay. So we're looking at this one. You know what? That is, we got $6 here and number of verticals is 1. Yep, we're all squared away on that. It's 180. So this is giving us a potential return of 43%, which is a little higher than 32%. That's typical with long verticals. They'll typically provide you with a higher return on risk. We just want to keep in mind the probabilities of success are significantly lower. Let's come over here and put in a closing date. Then we'll say on this one, let's just say hypothetically, we exited the trade on 5/30/24. And now on a debit spread, when you exit, it's usually going to be a credit. Okay. Again, if we wanted information, just click on this column heading. This will describe debit spreads, credit spreads, whether or not these numbers should typically be credits or whether they should be debits. On a credit spread, it's typically going to be debit. On a credit spread, it's typically going to be a debit. On a debit spread, it's typically going to be a credit. So we entered in at a debit. Oh, you know what? I need to change this number right here. That needs to be a negative $1.82. I was looking at these numbers thinking, you know what? That doesn't look right to me. Okay, but let's make that correction. I got a negative 182, that's looking more like it. Okay, I was looking at it and say, what? Okay, but that's more like it. Remember, on the debit spread, when you enter, you typically pay a debit. That's money coming out of your account. So you want to enter that as a minus, in this case, a minus 182, 1 vertical, this is more like it. Maximum gain of 416, maximum loss of 183, a 277.33% return. Again, this isn't unusual for a debit spread, particularly when we're talking about $6 wide. We just want to keep in mind that the probability of obtaining this is significantly lower than what we're looking at here with regards to a credit spread. Then over here where we have enter our credit or debit, again on the debit spread, we're usually exiting in as a credit. On this one, let's look at it from the standpoint that the trade really didn't go that well for us. So we got a credit when we exited it, but the credit wasn't big enough to compensate us for this debit, which means we'd be looking at a loss. Let's say we're able to muster together a credit on this spread of 50 cents. Now we'll leave this as a positive number because that's a credit. There we go right there. And now we have our realized profit and loss. It's a little bit hard to see here, but this is a minus 134.60, so that is a loss. The realized return on risk is a minus 73.43. That's your loss right there. Days in the trade here, this is wrong. This is 365 days. What's going on here? Oh, you know what? I didn't put 5/1/30. I put 5/1/1. So let's go ahead and change that to 5/30. Okay, because we were saying we got out at the end of May. Let's see, 5/30/2024, 5/1/2024, and days in the trade is, oh, you know what? Let me change that to, we want to go 5/30/24, okay? So hit that, and that's going to be correct. So when you have questions, just come over here where it says closing date, hit that, enter date, the position is closed. Use the same format that you use over here on your entry date, okay? So you won't have that little hiccup that we had right there. Okay, so that puts the trades in there. I'm actually okay with a couple of errors as we're going in here. That just helps solidify the points that we want to demonstrate here. Notice when we come up here, total trades 2, winning trades, 50% of our trades are winning trades, losing trades, 50% are losing trades. Our average return on risk now is 23.17. Average days in the trade is 21.5. Total profit, total losses, gives you all information. These are both the same here because our year-to-date numbers are the same, but as we go through the end of 2024 and continue to use this spreadsheet, then these will start to change. We'll set this back. To set it back, you just come up here, and for example, if we were talking about January 1st of 2025, we would change this date to January 1st of 2025. Then these would start moving different from each other, okay? All right, investors, so with that, let's just go ahead and wrap things up here and say thanks for joining us here for this little session on using the Schwab Trading Journal, particularly the vertical section of it. Just a little bit of a heads up. You can find me on Twitter at KenRoseCS. I post things on Twitter related to this area as well as other areas of investing. Bye, everybody. Thanks again for joining us. We'll see you.